afternoon, everyone. Here we have John Forry. We are enjoying a sunny afternoon in LA in a historic building here in West Hollywood. And we have with us John Forry, who is my fellow partner in one of the association, CBIZ LA, that is helping a lot of executives and companies bringing business to LA, setting up new businesses to the West Coast. So John is one of the most prestigious lawyers when it comes to corporate, setting up a corporation, forming a corporation, everything regarding to the different options that we have, and also all the different tax implications. And today we're gonna try to work with him to actually know about him and get some more understanding about what are the possibilities that we have when it comes to form a new corporation in the US, and what implications does it have for the business people that they want to get into the United States. Sounds like a plan, John?
Yes, thank you very much, for having me here today. Please ask a few questions to lead our discussion.
Yeah. So I think that the first question is, and it's kind of a very simple summary of what are the different options that you know, anyone that wants to start a business in the US, whether they, I would actually focus on more the international businesses or international executives that they want to get into the United States. What are the different options that they have in forming a corporation?
Yes. Well, there are numerous various business vehicles in use in the United States, but two of them that are most common are what we call a C corporation, which is a subchapter C corporation, which is a regular corporation, has stockholders and officers and directors and so forth. The other one is a limited liability company. And in each type of entity is available in any one of the 50 states in the United States. One of the main differences is that for a corporation, that's a separate legal entity. It pays its own taxes, and distributions out of it are typically subject to some kind of withholding tax, a dividend tax or something of that nature, capital gains tax, at the shareholder level. In the case of the LLC, as it's called, that is generally treated as a pass-through entity. So the entity itself is not taxed. The owners are on a direct basis, but there's no double taxation. And we don't have a good method of eliminating that double taxation at the corporate level. Some foreign countries give a partial credit to the shareholders for that corporate tax. You know, others just don't tax the distribution, that sort of thing. But we unfortunately do not do that. So that's a major difference between the two.
How long is the process, and how much it would cost?
Well, the actual filing fees to government entities, agencies, in forming either one of these is probably about $1,000. And on an annual basis, there needs to be a corporate agent or an entity which represents the corporation or the LLC in its home jurisdiction. That's where people can send notices to the company, whether they're government, private people, whatever it might be. And that usually costs somewhere around $300 to $400 a year for that entity to maintain those services. And they also provide a mailing address for the company, for the corporation or LLC. So even though you may have other addresses, and customers and contractors and shareholders or owners will all know some other addresses, that address is always available as an official address for the company.
Mm-hmm.
Well, it takes about 10 days to form.
10 days.
Yeah.
Pretty straightforward.
Yeah.
One of the questions that I was get from my clients, and I'm sure that your clients ask you the same question, is that when is the right time, right, to set up a corporation? Because some companies, they hire consultants to actually have a understanding of the the market, have an understanding of how their product, service, application is perceived in that market.
Mhm.
But it gets to a point where it's difficult to attract talent if you don't have a corporation. It's difficult to sometimes to make business. You don't have a corporation. When do you think is the turning point where companies need to form a corporation?
I would say that even if you hire, let's say, one part-time consultant for one area, another part-time consultant for another, and perhaps you have somebody who handles kind of back office, bookkeeping or something like that for the local operation, just to keep things straight. When you reach a point where you're employing probably the equivalent of 2 or more full-time employees, so that might be 3 or 4 people spread over that 2 FTEs. But when it reaches that total amount of local work that's being done in behalf of your business, I think it's time to seriously to consider a company, whether a corporation or an LLC, in order to house those people and to provide a single point of contact and identity for your customers and suppliers.
Mm-hmm. When it comes to the U.S. market, when international executives come from overseas, in particular from Europe or some countries in Latin America, they get they get surprised with the importance that benefits have in the total comp or the offer for a potential new employee to actually be competitive in the market. The medical cost, there are a lot of retirement, 401ks, IRAs, retirement tools that they are not that common in other parts of the world. So when it comes to what we call benefits, that's a very broad term. What are what is your definition about benefits, and how much or what are the different options and costs that the new corporation will have to get into if they set up a benefit plan for the organization?
We have a significant number of different benefits that are geared really to employer-employee relationships. It's true that any individual may have an individual retirement account, an IRA, or may also have a so-called Roth IRA. And they can contribute something to those every year. And earnings within those retirement plans are not taxed unless they're distributed. When they're distributed from the IRA, they're taxed to the owner then. The Roth IRA is even more favorable, but neither of them compares to the total benefits available through an employer-employee relationship. One of them, for example, is often termed cafeteria plans. And what happens there is that the employer establishes, let's say, certain medical benefit plans. And the essence of that is that the employee and the employer can contribute to that. When money is actually spent for medical costs that the employee has put in, the employee gets to be able to deduct that. It's a deduction. We don't normally allow
the deductible and the out-of-pocket expenses as well.
Yeah, everything. Yes, because and we don't normally have deductions for medical expenses by individuals. Yep. That's it. Doesn't happen. This is a very important benefit. It's not just limited to medical costs, but it's frequently used for those kinds of expenses. And of course, employees are very happy, very fond of that benefit. It really doesn't cost the employer anything. Obviously, the employer usually contributes something to the plan, but it's the deductibility of the medical costs for the employee that really drives the attraction for an employee. Then you've mentioned a couple of others. I'll mention a couple more before I get back to yours. A very important, very widespread benefit is the offering of stock options and an option to purchase stock of the company. and that is typically granted by the board of directors to classes of employees, or what's called a restricted stock plan. It means that the board actually grabs a hold of a bunch of current state shares and issues them to employees under restrictions. They vest over a period. They can be bought and taken, sold. They're already owned. They can be sold by the employee after a certain period of time being with the company. But in both of those cases, if you have a qualified plan for that, the employee is not taxed at the time that those awards are made. In the case of stock options, not taxed at the time that they exercise the option, even though the stock at that time may be worth a lot more than the option strike price, as we would say. Only later, when the shares are actually sold that have been purchased under the option, or the restricted stock has vested, that's not taxable either. But when the employee sells it, then it's taxed. So this is a huge benefit for employees to participate in the success of the company, but without paying a lot of tax up front, because since there's no cash that goes with these awards, if they were taxable, they would be a big burden on the employee. They would otherwise, if they were just going to buy stock of the company, they have to go out and pay the regular taxes, go ahead and take the after-tax money and buy the shares. This is a great attraction to employees. But even simpler ones, benefits are, as you mentioned, 401k plans. That's a plan which is set up by the employer, and the employee and the employer both contribute to that plan. And the 401k plan, let's say the profits in that plan's investments build up tax-free unless and until they're taken out by the employee. That's, again, similar to what I was mentioning before about the share plans. In addition, we have defined benefit retirement plans. So in other words, the company creates a retirement plan. Both the employer and the employee typically contribute to it. Deduction payments into it are typically deductible for the employee, and the buildup in value of retirement benefits is not taxed until the employee actually retires and starts receiving those benefits, receiving cash for those. All of these have an employer-employee relationship there. So unless a business itself gets involved in providing those benefits, helping the employees get them, they don't get them.
Mm-hmm. I think you actually addressed it before, but when it comes to maybe corporations who are overseas and they want to set up a new corporation in the US, but maybe they are providing a service, or they are, they have one employee, but don't have a physical office. How they can set up an address? Like how, is it that critical to have an address for the organization?
Well, often it is not. I mentioned that in the state where the corporation or LLC is organized, usually one which has low taxes itself, very light regulation of corporate activity, company activities. That would be Delaware, Nevada, Florida, Texas, even Wyoming, not quite so well known as others, versus another state like California or New York or Illinois, which has quite high taxes on the worldwide income of local businesses that are organized there, headquartered there. So that's a big difference. Even if you set up a business by your Delaware corporation or LLC, set up a branch or some kind of a distribution operation or sales operation in California, yes, you will pay taxes on the revenues from that particular business operation. And of course, you're subject to whatever regulations California has for that kind of business, but not on your worldwide business, not on the rest of the United States, for example. So there is some, let's say, advantage to having a particular jurisdiction, picking the right jurisdiction for setting up your company. Then the question of offices. So there has to be a legal address as it were, manned by the or womaned by the corporate trust company of that in that state, which will provide an address and an agent, a live person, to deal with anything that comes to that address. But wherever the company thinks it needs to have a physical presence, a market where they have to have people perhaps based in a central office so they can go out and regularly meet with customers or potential customers or suppliers in that area. Sure, people do that all the time, but it's that office that handles that locale's business. It's not having to have a physical office that handles the national business, the entire business. And you don't have to put people, in all those places. You can send them as you wish. And that brings up your second part of your question, which is how about remoteness? And clearly, after the pandemic learning experience, many people have learned, both employers and employees, that it's quite feasible to do a lot of things from remote locations. But they don't have to be remote just within the United States. They can be remote from abroad. So if you have, for example, you might have a technology expert in your business, and you only have one, and that person is heads up all the technology applications and so forth in your business. That person could be part of your business in the United States acting remotely. There's nothing illegal about that. In fact, there are actually some potential tax benefits. If the services provided from these remote foreign sites are also part of the profits, part of the revenue from the customers, it may be just built into the price of the products or the services the company is providing, but you can attribute a certain amount of that price to those services. Those services typically are treated as being performed outside the United States, not U.S. source income of that foreign provider, the foreign parent company or whatever company houses those foreign employees who are involved with the U.S. market. So actually, the company may very well be able to exclude that portion of revenue because it's not providing those services, as between itself and the home company, the part attributable to those remote workers in that country are properly part of the revenue of the foreign company and are not taxed by the United States. They're foreign services of a foreign service income of a foreign company. Even though the customers in the U.S., we treat the place of the services as being where they are performed. So there's some opportunities in this remote age we have. And also, you don't have to move everybody over to the States. You don't have to hire somebody, in the U.S. to do all these things. It's both more practical and has some financial benefits.
So I truly appreciate this time with you. I think you give us a lot of great recommendation and advice on what are the typical situations where companies and executives need to think about forming a corporation in the United States. You also provide great examples of having fiscal tax benefits in creating that corporation, and hopefully your information helps a lot of people in actually determining when that's going to happen. I'm sure that John would be a great resource, and CBIZ could actually be a great partner to anyone that it's in that situation. So thank you a lot for your time, John. I truly appreciate your advice and recommendations, and hopefully this is the first of many.
Yes, thank you, Javier. Well, I look forward to working with you and anybody who you're involved with in these moves. Thank you very much.
Have a good one.
Bye.